Do you believe a stock decline is always a bad thing? Well, today we're going to be talking about Main Street Capital, and that's what's going on with them right now. This article is from February 22nd, but we're going to be taking a look at the charts from today, February 24th, and they're still pulling back. Main Street Capital, ticker symbol MAIN, MAIN, has recently dipped, and while some investors might panic, others might see it as an opportunity. So, in today's video, we're going to be talking about what is happening with them, why this drop could be a strategic entry point, and what we should be looking for in the upcoming earnings. So, on the day, Maine is down 2.63%, currently sitting at $60.63 after recently closing at $62.27. But as an investor, I am not panicked. We have seen that the S&P 500 and the Dow have also seen declines, showing that this is not an isolated event when it comes to Main Street Capital. With their earnings coming up on February 27th, some investors might be adjusting their positions in anticipation of potential volatility. And as the stock price rises, periodic pullbacks are normal. You have to be ready for the way investing flows. So, what I'm saying is, are you asking yourself the question, is this a bad stock? In my personal experience, definitely not at all. In fact, this dip has been a buying opportunity for me. I will be showing my personal numbers when it comes to investing into Main Street a little bit later on. So, I'm going to tag this article in the description. This will give you some other dividend paying investments that you might want to research for your portfolio. It's the top 25 high dividend stocks yielding 4 to 10%. And this is on Simply Safe Dividends. And it also has a feature that I love by ranking the safety of your investments. And I'm mentioning this because Main Street Capital is on this list. They come in at number 12. And we're going to take a look at some of the points that they share here. But instead of looking at the price drop as a red flag, we should be asking ourselves, does the stock still have good, strong fundamentals? And with Main Street, the answer is yes, for many reasons. They have consistently paid out their dividends. They are a favorite monthly paying dividend investment in my personal portfolio with a long history of their distributions. If income is your goal, this company still delivers when it comes to that department. Main Street Capital is a BDC, a business development company, which means it provides financing to small companies and earns steady returns. Higher rates have been benefiting BDCs as they make money on loans with floating interest rates. So if the Fed holds the rate steady, Main Street could remain profitable. And another reason is that this isn't the first time that Main Street has had a short-term pullback, but long-term investors have seen strong returns and income growth over time from investing into this particular company. So rather than seeing it as a warning sign, we can see this chance to buy at a discount before it starts to tick back up. So when it comes to its ranking on Simply Safe Dividends, it is ranked as safe. It has a dividend yield of 4.8% and an uninterrupted dividend streak of 17 years. The firm has never reduced its dividend since making its first payout in 2007, which covers a stretch of time when we had 2 recessions. In order to keep their dividend safe, Main Street maintains a well-diversified loan portfolio of around 150 different companies. No company tops 5%. They're structuring their portfolio in a way to protect from the stress of one particular company or sector. So with any investment in my portfolio, I'm always ready for that volatility, but it helps when you get that dividend, especially on a monthly basis, when a particular investment does have a pullback. Main Street Capital has their earnings coming up on February 27th, and I'm going to run through a few points that we should be paying attention to. We want to see that they are continuing to be profitable, that their numbers continue to be stable or increasing. Are their earnings strong enough to continue paying out that monthly dividend? Well, we see from the last 17 years of history that they've been on track to do that. And when it comes to the portfolio of companies, what is the company saying about the future growth, interest rates, and market conditions, a positive outlook could drive the stock price up. Okay, so now let's take a look at my real numbers when it comes to investing into Main Street Capital. I added to my position this morning just 0.4 shares. I currently have 39.4 shares. I'm up 45.24%, which is $745. But on the day, I am down 58.46 cents because, as we saw earlier on that chart, we've been down about 3% on the day. My average price is $41, and it has been the strongest performer of the monthly paying dividend companies that I added into my portfolio. The other two are Realty Income and SPHD. Before we wrap up, just a few more points about Main Street Capital. BDC stocks like Main are not just about price movement. They're about long-term income generation. Reinvesting those monthly dividends can compound growth even faster than quarterly paying stocks, which I am doing, and I share that on a monthly basis. Check out my dividend videos for more detail on that. Main Street is going to be in every video because it is a monthly payer. Interest rate cuts could lower earnings slightly, but Main's diversified portfolio helps to manage that risk. And another thing that I love about them is that they pay extra dividends, a bonus dividend on the quarter. So BDCs sometimes distribute extra cash when the business is thriving. If you're holding on to this one for the long run, focus more on dividend stability than the short-term price action. So on the day, we are down, like I said, currently at the time that I'm recording, 2.71%. But I posted an alert that I received to my community wall earlier. When I added some to my portfolio, it was down 3.04%. That's where I had my alert set at to let me know if it dropped by 3%. Over the last month, they are down 0.96%. Year to date, up 3.41%. Over the last year, up 31.90%. And over the last 5 years, up 64%. And I've been investing for over a year now. And as we saw, I'm up 45.24%. So let me know, are you currently holding Main Street in your portfolio? Has it not disappointed as an investment as far as share appreciation and, of course, that monthly paying dividend? So as you already can see, I'm taking this dip as a buying opportunity, a chance to buy more at a discount. Now, I don't do this with every investment, but the ones that I've done my research on, I've seen the history, I've seen how they've grown steadily in my portfolio. I take the red days to buy even more. And we will see if there's other opportunities later this week with more volatility related to earnings. So focus on the fundamentals and the strength of the companies that you add to your portfolio. And don't be shaken out by any short-term volatility. I want to hear from you, so make sure to leave me some comments. Are you buying, holding, waiting for earnings to make any more moves as far as adding to your portfolio? If you're not already, make sure to subscribe, like, hit that notification bell so you can keep up with all of my videos and live streams. I hope you come back so we can continue to learn and earn and stay informed so that we can build wealth for ourselves and our families. Thanks for watching. Okay, bye.